What I like to do whenever I'm working with an ACL audit or data analytic audit is to think about the audit objectives and then boil that down into audit questions and then have batches that answer those questions. And we're going to talk about those questions today, and here's kind of an example from my payables test set. I don't have a general ledger test set, so I don't have that, but looking at this you can kind of see how ACL scripts are then aligned to the various audit objectives that you may have within a payables processing, but thinking about it as well as you think through your questions and thinking about the objectives for general ledger. What I try to summarize it out to is a query viewpoint, and what that shows you is a way to look at your data from a data mining point of view, which might be analyzing, say, stratification, statistics, summarizing it by month and year. That's more data mining, whereas querying is actual questions that you're going to ask. All of that, though, goes towards asking these questions. I mean, even if you're running a summarization by month and year, you are asking a lot of when questions, and if you start summarizing it by the stratification, now you're answering a lot of what questions. So, I like to use the journalistic type approach of who, what, when, where, and why when taking a look at my data analysis and making sure that I've covered all of those areas in this. So moving on here, some of the summaries and data mining ideas, we just threw a few of them out there before we get into the query reporting. Again, just going back to this slide here, you can see the data mining component as the query component relates to all of the questions. The data mining part, I think you're generally summarizing things by personnel, by contextual summaries such as transaction types, and then time trending. And this can be interesting, especially things like looking at the last month of a general ledger versus the first 12 months, or maybe the 13th month, the month that falls into the next period. Transactions, obviously, at the end of the year, beginning of the year. These are all things to really think about in any audit, but especially in a general ledger audit, given the year-end crunch that always tends to happen. And then, moving onward, taking a look at how to graph that. ACL may not be your best bet for graphing. I mean, it's something where it isn't a bad tool for graphing, but it isn't extremely good either. Doing something like this, you would need Excel at least, because that's going to give you more of a stacked column, which you can kind of analyze. And I'm trying to think here, this is a monthly spend type, which you may be interested in. But this could also be a stratification of activity, month and year, and looking for kind of large periods of time. We're going to show you how to do all this in ACL today. Might have a little bit of time to jump into Excel, but again, just wanted to show you that a lot of the graphing capabilities of Excel can really help in any sort of data mining you're doing, because when you start looking at those summaries of data, it gets a little hard to differentiate the trends. The other thing that I wanted to bring up today, and before we get into the query questions, is I like to transactionally score information. So if it is an accounts payable, I'm going to transactionally score a payment. If it is a general ledger, I'm probably going to transactionally score the journal entry that's being posted. And I find that the questions, be it some of the data mining you can do this with, but I think the queries are where this really kind of comes into its own. And building a transactional score around those queries so that you can find those journal entries that show up on the most reports. So in a transactional score, you're giving a single score to that transaction or to a journal entry based on the number of reports that it meets. And you could summarize it by entered, by department. You can scattergraph that final activity, even look at it by, say, business unit. If you wanted to figure out where you're auditing this year, you could summarize it. And you're mostly looking for the volume and the values that are major changes, and also then sampling. But usually what I do is I sample in a variety of the quadrants of let's say high score, high amount, medium score, high amount. Probably the low score, low amount, I think is probably a quadrant that you might want to pick a couple from, but it's not a critical need. The nice thing about transactional scoring is that you are now sampling based on how you perceive risk and how you mathematically calculate risk based on the number of queries that are coming up. So I think, again, it's more of my own opinion, but it just logically makes sense to me, and hopefully it does to you as well, that the goal here is not just to run one report, but many. And then summarize those reports by perspective: who, when, where. What you can do is, and this gives you an idea of the different types of who and where and time frame when, what, the dollar magnitude, the growth rate, and kind of why is more, again, I think the score, the risk level. So the what is more dollars, time, where, when, and who is more or less what you're then summarizing on. And that kind of brings us back to that data cube that you can see there, that those are the three that really make the most sense from a summarization and cube point of view. All right, so without further ado, and I've shown these before in other webinars as kind of a good example, but I still stand by them. They're pretty good. It may not be the best, but they're pretty good general ledger journal entry testing that you can do. And doing things like summarizing journal entries by enterer, taking a look for unique and the repetitive journal entries, extracting manual journal entries, which are ones that have more of a higher likelihood of being a bit of an issue, stratifying the size of journal entry amount, summarizing general ledger activity on the amount field itself so that you could take a look at from a Benford law point of view, and then scattergraphing some of those transactions as well. We may not have time for all of this today, but we're going to show you quite a bit of how to do every one of these tests. From a when point of view, taking a look at holidays and weekends, although I find that this test sounds good in theory, but most accounting departments work holidays and weekends, especially in crunch time. However, you can take a look at, let's say, weekends that are more mid-month and are less of a crunch from a year-end point of view or quarter-end point of view. So why do you have a lot of activity there? Taking a look at prior year to the previous fiscal year and summarizing by the actual day, month, and year, taking a look at when these transactions happen. I find the day graph is really useful. I usually do a summary and then put it into Excel, and you'll just invariably have a day here or there that just jumps out of the norm. So that's quite interesting as well. Then from a where point of view, we're then taking a look at where are these items posting in the general ledger. Is it happening in suspense accounts? And here's a great one, looking at accounts that are problematic or complex based on previous year audits. I can't tell you how many companies do not track that. And I think any sort of kind of error tracking, or we used to call it in auditing the permanent file. So you have the permanent file for a client and then the audit records for each year or quarter. And this is like good permanent file stuff that is evergreen. It just seems to always come up in audits. Again, can't tell you how many companies don't track that, but it would be very useful. Then maybe taking a look at just kind of some stranger where activity like debits and revenue. You might even have things like debits within the fixed asset area that don't relate to fixed assets. So it could be credit, revenue, debit, fixed asset as an example. So taking a look for fixed asset increases that are not related to purchases or any sort of construction activity. And there's a host of things like that. So something to consider. I usually, what we don't have here, but I want to note in the where section, is taking a look for revenue entries that don't have an offset to accounts receivable or cash. So again, normally you have your revenue, you put it into receivables, or you got some cash and you put it to, but anything else is going to be more, I guess, a deferred revenue, or who knows. So these are things that you want to kind of look at and try to understand things that fall outside of the norm from a where are they being posted in the general ledger. And last but not least, I kind of threw into the why section here a bunch of reports that are just strange. You know, why is this happening? I mean, you could argue that, going back to my theory from before on the scoring model, that you know the who, the when, and the where are some query reports that you can focus on. The what is more of, again, the dollar amounts that are being kind of worked on, and the why is more of the just overall score that you could calculate from all of these other reports looking weird. So you know the why doesn't have to be these kind of weird reports. I just didn't know where to put them, like, you know, journal entries that are round multiples. I guess that could go into the what section because it relates to amounts, but it just felt like why was a better place to put it. So just trying to explain some of the logic of building this thing, and taking a look at the why, taking a look for accounts that are above average, accounts that basically have journal entries that end in round multiples. I think even looking for accounts that have round multiple final balances. If you got a trial balance and ran just everything that has a final balance that's a round multiple, it's very interesting. I mean, there's usually a lot of equity accounts that fall into that category, but it is interesting to see what liabilities are out there, or assets, especially assets that are out there that just have some round number to them. Taking a look at key text such as plug, net to zero, we're going to show you a script that actually, you know, does that for you, and you could build a table of all of these words, and ACL will actually go through the table one by one and, you know, methodically knock them off. You know, then taking a look at entries below approval limits, so that's kind of weird, and then entries that don't net to zero. This happens a lot more than you think. The rationale, though, as to why this happens is probably a little bit different than what you're expecting. What I find is that when they don't net to zero, you're more or less dealing with an entry where you don't have the entire general ledger. So you might just be looking at the manual journal entries, for example, and if you could believe this, there's some manual journal entries out there that have almost like a half manual, half automated portion to them, so it doesn't show up. Or it might be business units that you don't have. So you know, you have all business units except business unit 999, because that's more of a strange business unit. Once again, that would be a category where you could you know, take a look at the data that you have, but you have to remember you're missing some of these business units. But I do find it's interesting, out of, you know, most general ledgers, the netting to zero journal entries is maybe just one or two, and then there are other situations where the netting to zero journal entry can be thousands if you're missing some of these other business units.